තුනකින් මේ ඔක්කොම කවර් කරන්න බෑනේ. එහෙනම් අපි කරමු අර මේකේ තියෙන වැදගත්ම ටොපික්ස් හතරක් පහක් තියෙනවා. එකක් කරන් පැය 3ක් කරන් එහෙම කරමු. ඒක තියෙනවා. රිලේෂන්ෂිප් එක හදා ගන්න බෑ.
Good evening to all. Today is the second day of the live webinar presentation for the benefit of strategic level students December 2014. You all know last year we started webinar series for several subjects to the benefit of students. This is that kind of a seminar today, second day, auditing. The presenter is here with us today now. He is a senior chartered accountant, CSC Lanka, and he's a lecturer, including MBA. And in several universities, several organizations, he is doing lectures. And he's a practicing auditing partner. So he is best fit for this presentation today. And in addition to that, on top of this, he's a council member. Now, I will invite Mr. Sanjay Bandara to do this presentation. And from the students, my request is, please make use of this time for the benefit of your examination. Thank you.
Good evening to all of you. Right here. So told to do it within 3 hours, but I was telling them is, might not be able to now. For example, the auditing, fairly comprehensive curriculum in the sense syllabus. If we are to cover this thing, probably, so we might need about say 2 to 3 weeks to complete the entire curriculum. But what I was planning to do here today, first I'll take you all through. So these examiners comments, I don't know how many of you all have gone through this one, because based on the the last 2 examinations, the answers written by the students, chief marking examiner and other marking examiners, they have got together and compiled a document, right? The examiners comments, right? This will be quite useful for you all to identify the deficiencies normally student commit in answering the paper. So therefore, now if we are aware of them, right, you all can ensure that you all will not do them, right? You all will not, basically so commit these errors, so that your possibility of getting through the examination can be increased, right? So thereafter, so based on, because in the last few days I went through some of the past papers, and I went through the auditing standard book and some of the other stuff, and consider some of the professional developments taking place in our profession, like the quality control and etc. And some of the new so our institute, there's a separate sort of a committee called IFRS Implementation Task Force. So there are many instances where some of these accounting issues are referred to this particular committee, right? Whenever accounting standard does not clarify, right, does not provide sufficient guidance as to how to deal with a particular matter, so now all these issues are referred to this particular committee, where I am also a member of this committee. So I considered some of these recently referred the issues to the particular committee. Now previously it was known as UITF. Now UITF is being replaced with this IFRS Implementation Task Force. So therefore, so what I did was, so I basically went through the some of these cases, so some of these accounting the issues put forward to this particular committee, requesting for the clarification, because those are the areas where there is a concern among the membership or among the practicing accountants or among the chartered accountants, where they need sort of the clarification etc as to how to resolve them. So therefore, those might be quite useful, especially examiners, because they might also be aware of them. There is a possibility where they might test them, in the examination. So therefore, having gone through the past papers, having gone through the documents relating to or a document or the matter discussed at IFRS implementation task force, etc., I basically prepared a small document where I'll take you all through the content of this particular document once I finish with this the examiner's comment. Okay, to start with this one, right? So I'll highlight some of the definitions. I don't know how many of you all read this particular document. This document is not available for you. Diana is not available to check with him. I don't know whether this particular document was available or is available for you all. Or was normally what happens is at the end of the examination, this document is sent for all those students who was not successful in the examination. Of course, if you are doing the examination first time this year, you all might not have got this, but if you are doing the examination second time, or if this time is a subsequent attempt, right, obviously you all should have got this particular document. Anyway, I'll take you all through. Now here what the examiner says is not plan the answers, right. The students have not planned the answers. Students should have referred to the relevant auditing standards, and all point for the questions are, they are referring to a particular question. Question number 1. So there's a direct question from the auditing standard book. It says all the points required being the answer for this particular question are there or were there in the auditing standard, but most of these points were not written by the students, even though your examination is an open book examination. Second, it goes on to say that it's a practical question where the candidates have not planned the answer the way it should have been written, right. Third one, it goes on to say that candidates have not spent time to read the question before answering. So it says that so they have experienced that they have felt that the students have not read the question so before answering. So therefore, or else they had experience in preparation for similar question. For example, the main point they are highlighting here is, okay, students have not read the question well. They have written some answer, but so that implies the fact that the students have not sort of read the question. Second one, it says that it appears that students have sort of answered for a similar question previously. Maybe so while you all are preparing for the examination, might have read or might have answered similar question which was there in maybe some of the other examination, etc. So therefore, the examiner says it appears that you all have repeated that particular answer here without really been answering the question being asked in this particular examination. For example, assume that audit opinion related question, right. Now the question was there in this particular paper, and you all have answered for a similar question while you all were preparing for your examination. That question might have been there in the previous examination or some other professional institution examination. So therefore, the examiner says what appears, so what you all appears to have done is you all have repeated that particular answer here, so without basically answering the question being asked. So therefore, that might happen, right. So therefore, the examiner says this is one of the other issue highlighted by him, right. The candidate should read the question and analyze how to answer the question before referring to the prescribed books, etc. Here what he says is, okay, you all refer to the book, you all read the question, and then if necessary refer to whatever the books available, right, and then compile the answer, compile the appropriate answer. Okay, likewise, Mr. Anand, sorry, I'm not available. Anyway, likewise, there are some, lot of other comments given in this particular document. If possible, I don't know whether this is available in the web. Normally, these examiners' comments are available in the web. If you all have a time, right? So, it won't take much time. So, 2-page document. Just go through this one. Just go through this particular document, which will give you all, some indication or some area that require improvement in compiling an answer. Okay, that's it. So about the examiner's comment given here. Okay, now we'll get into the discussion where now even the examiner has highlighted, the marking examiners have highlighted there, and you all are aware that this auditing paper is a practical paper. It is a practical paper. In most of the time, the practical scenarios are given. Practical scenarios are given, right, where you all will have to compile an answer to suit that practical question being given. Now, most of the time, even the examiners have highlighted that it appears that the students have not understood, or you all have just repeated something extracted from the auditing standard, or something extracted from somewhere in your the answer script. So therefore, one of the main thing what you all should understand is this is a practical question, a practical paper, right? Think in terms of the practical aspect of auditing standards or the practical aspect of accounting standards, right? And then based on that, so compile an answer. Now for this particular purpose, what I'm suggesting is based on my own experience also. So to answer the questions as much as possible. Right, maybe the say last 3, 4, 5 examinations past papers, or now you all can get hold of, for example, ACCA papers or ICAW papers. Now take some papers, in addition to the past papers, and then write answers, so that you all can ensure that you all have a better experience or a better exposure in compiling the answers for the questions. Because what happens is most of the time what I've seen this is previously actually we did sort of an investigation to see why most of the students fail examination, right? So especially at S2 level. So where we have realized or we have identified that most of the students, they don't write the answers, right? Now, so probably you all might, I mean the students are going for classes, right? And there are good lecturers, of course, they are giving, sometimes they work out some questions, so they give you all, they discuss some answers with you all, right? And they give you all the answers. You all write down the answers, so they give you all the answer in printed format. And then at home, what you all do is, now you all compare the answer, right? Question is there, answer is there. You all basically check whether your lecturer has compiled a proper answer, right? The students, they don't write an answer, they don't have proper experience in compiling an answer. This is one of the main deficiency we have identified. For example, especially when it comes to the papers like auditing, right? Now you all should be able to, your student should have the ability of writing an answer or compiling a proper answer, right? To do that, you all should be having that experience in writing, right? You all should be having an experience in writing or compiling an answer. So therefore, what I am suggesting is, say take maybe 2 papers or 3 papers or 4, 5 papers, right? past papers or ACC papers, and then compile an answer. Once you all do that, now our institute, now we have the suggested answers, you all can take the suggested answer and then compare your answer with the suggested answer, right? Normally, for example, in my office, there are a couple of students who were basically failing this particular paper, a couple of times. So what I did what I told them, okay, look here, now this is another main issue, you all don't compile an answer, right? You all compile, you write the answer. You take the last 2 papers, write the answer, give it to me. And then what I did was, I took the answer and I did mark it, right? And then, I realized that, okay, the first time, it was, I told her, okay, take whatever the time you need, right? And write an answer, give it to me, I marked it. Right, the particular student, after taking say 4 or 5 hours to compile the answer with open book or whatever the books available, took about 60 marks out of 100. So then after 2 weeks time, I said that okay, so I got the particular staff member to come into the office, right, in the evening. I told that, okay, I'll give you 3 hours, right, now take 3 hours, take only the auditing standard book and accounting standard book, the books permitted in the examination, and compile an answer. Right, I gave her, 3 hours to compile the answer in the evening. Right, and that time the same paper, remember same paper, right? That time, she got the 2 box and compiled an answer. Second time when I marked it, she got about 78 marks, right? Then again another 2 weeks time, the same time I got her down to the office in the evening and got her to write down the answer, right? Likewise, the third time, she got about 95 marks, right? So by doing the same paper 3 times, third time only she got about 95 marks. Right, so like this, we got basically had to work out 3 papers like this, where the last third attempt she got about 95 marks, right? That particular examination she got about 70 marks for the auditing paper and got through the examination, right? So therefore now all these days, I know that for example she was a manager of ours, she knows her auditing well, she knows the auditing standards well, but did not have a proper experience in compiling, writing an answer. Right, so whenever an answer is compiled, write quite a lot of things which is not really necessary. That is why even here the examiner says that students are not focused, right? Write quite a lot of things, but not really the areas or the answer required by the examiner. So therefore now if you all want to get some experience, right, so the first thing what you all should be doing is, take about 5 to 6 papers and compile an answer. That will be really helpful for you all to get some hands-on experience prior to going for the examination. So the second one, is this. Now you all know that this is open book examination, right? Open book examination, where one other thing what I have realized is, now students, right, since this is open book examination, students don't study the accounting standards and auditing standard enough. Now we all know that, as I said earlier, this is a practical paper, but to answer the practical paper, you should have, or you all have to have strong theoretical background. You should have a strong theoretical background. If you all have, only then you all will be able to apply that theory and compile a proper or an appropriate answer. So therefore, now here what happens is, now you all know that you all have that comfort. You can take your auditing standard book. You can take your accounting standard book. So therefore, you need not study accounting standard. You need not study auditing standard. But that perception is wrong. Because what happens is, in the examination, if you are going to, for example, locate. So, for example, now a couple of students, what they were telling us is, now we had sort of an interview with those students who were not successful in the examination. Now they were saying that, what went wrong with them is, in the examination only, they try to identify. For example, there's a question. They read the question, they understand the question, and they are only, so they are trying to identify what is the standard relevant for this one. So which paragraph to be referred to. For example, whether the impairment standard is relevant, or whether the PPE standard is relevant, or whether the investment property standard is relevant, or whether the financial instrument standard is relevant. Now, so they are checking, right? For example, initially to turn to the financial instrument standard and read couple of paragraphs, and then realize that, okay, so this particular issue is not addressed in the LKS 39, and then turn to the impairment standard, right? And then turn to the different pages and see whether this particular issue is addressed in the impairment standard, and then realize that it's not addressed in the impairment standard. So likewise, so you go on until you find it. But it might take, for example, to answer the 10-mark question, probably the particular student might spend about half an hour to 1 hour, because to locate, to read and locate, or to read and identify which provision you got to use, what answer you got to compile, you have to read, you have to think. So because it shows that you are not familiar, you are not studied enough, right? Accounting and auditing standard to compile the answer. Therefore, one of the prerequisite, even though this is open book examination, remember you all have to have a proper understanding on accounting and auditing standards. So therefore, now what I have been always suggesting, right, you all now, so you all, whatever the books you all are having, read well, right? At least what I was suggesting, for example, the students reading for the examination in my firm, at least say read your auditing standard 3 times, right? So read all the accounting standard at least twice, and see whether you understand all accounting and auditing standards before you go for the examination, at least to the 90% level, or at least to the 80% level. So that will give you a comfort that, so whenever necessary, you can take the benefit of giving this open book concept. You can refer to the auditing standard or the accounting standard, take the essence and compile an answer. For example, those who sat for the examination, in the last examination, know that there was one direct question from the auditing standard, for 10 marks. I mean, no, it was not required for them to think, right? Even though that was not the intention of, the permitting, the giving this, the open book concept, because open book, the concept was introduced where at this particular level, students are required to apply the standard, right? And apply the standard and then compile an answer. Not that, repeat what is available in the auditing standard or the accounting standard book. Then you all might answer, if a question like this those are repeated, you all might write in your answer booklet, please refer page number 225 in the auditing standard book for the answer. So if it is same, this one from the auditing standard or the accounting standard, I mean, no need to repeat that one in the answer booklet, no. So therefore, remember, the examiner will continue to ask, the questions on application of the standard, right? But to do that, right, so you have to have that understanding. But what it appears happening here is, now you all take this as a comfort. Yes, it's a comfort. Now you all get a massive benefit provided you all have studied enough. So therefore, whenever you all study, now normally what we do, for example, we highlight, right? So we highlight whatever the important areas, right? So you can probably, if necessary, very short notes can be done in the whatever the standard booklets you are using. So then, you know, you can tag whatever this thing in a manner where you can easily locate the standard. For example, where the LKS 1, LKS 10, LKS 39 and all that, you can put a small tag so that you'll be able to quickly, you know, figure out where the LKS 39 is. You can easily locate it. So therefore, now that kind of an arrangement will have to be done prior to going for the examination, because otherwise what happens is, to find out where the LKS 39, you all might take about 2 to 3 minutes, right? So therefore, ensure that you all read and highlight, and then, you know, maybe necessary, if necessary, do small short notes, and then, you know, the doing some tags in a manner where you all can easily locate whatever the standard will have to be done prior to going for the examination, right? That will be really useful for you all to make use of this particular open book concept given, right? So locate something, right, and identify, and, you know, basically compile an answer. One other thing what I thought of reminding you all is, now for example, with this open book concept, now you all know that for the 100 marks, now you all are having only 180 minutes, right? For example, if there's a 10-mark question, you all know what is the maximum the number of minutes or whatever you all can take. For example, it's 18 minutes, right? So the 10-mark question generally will have to be answered within, for example, 18 minutes. Now, one of the other issue what I realize is with the open book, for example, now there's a question where you can answer directly from the book, auditing standard book or the accounting standard book. Where what the students, most of the students have been doing is, okay, so when you have a question where you can easily extract the information from the accounting or auditing standard and compile an answer, what the students are doing is, you know, so they are overjoyed and taking, for example, instead of 18 minutes, they might take 36 minutes. Because, for example, auditing standard book, you are having, for example, 10 pages or 2 pages. For example, you all know, the accounting auditing standard book, quite a lot of things are covered, right? So there may be, you know, the essential, there may be 2 essential points and then the 20 other points. The examination, for example, the examiner might want you all to discuss only those 2 salient features given in the auditing standard book. But when you all get this, the question, when you all see that, okay, in the auditing standard book, 10 pages, same issue is, you know, the address, you all might compile, you all might write all 10 pages. But the student don't realize the fact that, you know, even if you write all the 10 pages, you are getting only 10 marks, right? So therefore, so what happens is, now you all have to ensure that you all manage your time well, right? So even if it is there in the book, right? So if it is only 18 marks, right, sorry, 10 marks, right, you all can take maximum of 18 minutes. Now those are basics, right? But again, we'll have to remind you all because of the fact that, so we have seen that, you know, the students are basically, you know, taking too much of time and answering. For some students have been telling us, okay, so there were a couple of questions direct from the auditing standard book, this and that. We did the examination really well. But out of the 5 questions, we did only 3, right? To do the balance 2 questions, we did not have time. But ultimately, so when we investigate further, what has actually happened is that, right, taken, you know, many and written in the book. So therefore, please ensure that, you know, you manage your time well, right? So if you don't know the standard area to be referred to, do not waste your time in searching for areas or the standard that need to be looked into, right? What I'm suggesting, you know, I just, you know, wrote it down, right, to say that if you all don't know, for example, there's a point, now there's a question, for example, question number 1 or question number 2, there's a point or there's a question, you all don't know to compile this particular answer, which standard you got to refer to, right? Whether the LK is, you know, 36 or a 39 or whatever it is, or SLFRS 10 is not known. So therefore, if that is the case, if it is, for example, 5 marks, 6 marks, 8 marks and all that, you know, don't waste your time in locating or identifying the standard, so which you got to consider in compiling the answer. Because what happens is, you know, without your knowing or without your knowledge, you might spend, for example, 10-20 minutes in locating the required standard, right? And then identifying the provision. And then see whether it is relevant, this and that, you know, might take quite a lot of time. So therefore, if you don't know what standard you got to refer to, what I'm saying is forget about it. Because that might be, you might lose 5 to 10 marks, but again, you have 90 more marks where you can comfortably, you know, answer, where the taking the 50 marks out of 90 might not be that difficult. And, you know, some other things that I thought of telling you all, do not reproduce theory as it is. Apply theory and, you know, apply theory. Now, previously also I said that in the examiner's comment it was there, you know, apply theory and compile an answer. Don't repeat the theory as it is, which is given in the particular question. the particular book, right? Okay, that's about the open book, the concept, open book. I mean the facility given for you all. Make use this particular facility given in a meaningful manner, without wasting your time, without the unnecessarily spending your time on this. Okay, now we'll get into the main area, right? If you'll go through the last, say for example, 2 to 3 years past papers, right? So you can easily identify the fact that okay, always there has been 5 questions. Always there has been 5 questions. Out of the 5 questions, you can easily identify the areas from which these questions have been developed, right? Now, for examples, I went through the last so many years papers, right? So the first question has always been on planning, right? First question has always been on planning, right? And it was evident that in the first question itself, so many accounting standards have been tested. So many accounting standards have been tested, because now we should understand that, because to audit the financial statement, one of the factor auditor got to consider, right? One of the, because accounting, if there's an accounting issue will always become an audit issue. For example, so if for example say take so many standards, right? Now take say the borrowing cost. The borrowing cost incurred on an qualifying asset now will have to be capitalized, right? Whether the amount of borrowing cost capitalized is appropriate, whether the asset is shown at the right price, right? If it is not the case, now this is an accounting issue, but the accounting issue will end up with being an audit issue as well, because your profit might have been overstated, the income might have been, your asset might have been overstated. So therefore, what we should understand is, now this particular question, the first question has always been a planning question, right? And where many other accounting standards have been tested. Now, for example, you all know that in auditor's report, the auditor's report ultimately, so we say that this audit is being conducted in accordance with the auditing standard. Second one, in the opinion paragraph, auditor goes on to tell that these financial statements have been prepared based on Sri Lanka accounting standard. So therefore, now the being auditor, I am saying that these financial statements have been prepared based on Sri Lanka accounting standard. So therefore, for me to tell that, I should be aware of the accounting standard, because I should check whether the financial statement audited by me have been prepared based on the accounting standard, right? So that is why I earlier said that, that is why I think probably the examiner is testing quite a lot. That's why I said most of the accounting issues will ultimately end up with being an audit issue, right? So therefore, at least you all should be competent, right? You all should be knowledgeable on the main standard, right? So that is relevant and appropriate and applicable at this particular level. Now, for example, nowadays, so quite a lot of the discussions are going on some accounting standard. Later on we'll discuss, right? For example, financial instrument standard. Now the LKS 39 is going to be revised. So already been revised, which will be applicable maybe another 2 years down the line, right? Now we will take revenue standard. Revenue standard is another standard where a lot of the changes have happened, and from next year onwards it's going to be the new standard. Now if you all take leasing standard, right? There are a lot of the discussions going on. So a lot of the issues have been referred to the institute. So therefore, now is that there again not only in the local, even in the international context, right? A lot of discussions and a lot of debates are going on this particular the leasing standard as well. So therefore, now the examiner can easily, right, basically can include, right, can include some of these practical issues discussed at institute level or in our the profession, right, or the experience by the accountants in compiling the financial statement. So examiner can easily include couple of issues of such nature into the question and might get you all to comment on that one, right? So therefore, if you will take the first question is on the planning question, right? Second question has always been, for example, audit evidence, right? So the audit evidence and other services. Most of the time it was on the audit evidence, and there were a couple of instances where the examiner, the second question was on other services offered by the auditors. And the third one is on the audit opinion, right? Third question is on the audit opinion. The fourth one is about, for example, especially the last two the examinations, the examiner has tested, evaluate the internal controls, about the internal controls in a given organization. The examiner has given a story, right? This is organization, this is what it is, this is what they are doing, this is how they are doing it, right? And then request you all to evaluate the deficiencies of the internal control. Evaluate the internal control and then identify the deficiencies of the internal control and then come up with the proposals how to resolve the particular issue or the issues identified. Now, especially in the last examination, the examination before the last examination. So, this particular question is being tested. So, therefore, I feel that now the way the examiner, the last two examination, examiner slowly shifting to, so give you all internal, the scenario where you all were required to identify the deficiencies and comment on the, identify the deficiencies and then suggest the improvements required. So, therefore, I feel that I strongly believe that the examiner will test in this time also, because when you all read the past papers, you all can easily guess that. So, because that is the intelligence you all have to have. So, go through the last 2-3 papers and then when you all read the last 2-3 papers, you all should be or you all will be able to identify the direction examiner is working towards, right, or the areas tested by the examiner on a regular basis. So, therefore, the fourth one is about the evaluating controls and the fifth one is about ethics. Ethics, now there again in this particular context also, now we all know that, I think since you all are students, that final level, our institute has started, the quality control process, right. Now, we have the quality control standard, right, and on the technical division there is the separate the unit, right, working on the quality control of the audits. At the moment they have started basically the reviewing the firms, right, and the next step is they will go for the engagement review as well. So, therefore, there are many discussions happening at the institute level or at our profession about the quality control, right. So, first one is the firm review, second one is the engagement review. At the moment, now the last year and this year the institute started on the firm review. For example, there's a group of experts, right, appointed by the institute. So, they are visiting the firms and so the interviewing the senior partners and going through the manuals and other documents and see, right, whether so they are in compliance with the auditing standard on the quality control or the standard on quality control. I initially started that and then highlighted, okay, these are the areas where so your practice or your firm require improvement. Likewise, basically helping the practitioners to develop their practices. They started with that part. But again, now latter part of this year, probably or the early part of the next year, the institute will start basically engagement review as well. So, there are a lot of discussions and debates are going on in practice or at our institute level about this quality control. So, therefore, there is a possibility where the examiner might expect student, right, now you all to be aware, you all to be more aware of the quality control mechanism, right, quality control mechanism and even the ethical backgrounds, right. So, within which we should be operating, right, because nowadays is very important the ethics, right, and the quality control. So, therefore, now this the fifth question has always been on this particular area. If you will go through the last so many papers, the marks allocated for this particular question was limited about 10%, but last examination, right, it was little more than 10%. Now, seen that the deviation, right. So, therefore, that shows that the attention examiner is giving for the quality control and the ethics part is gradually increasing. So, therefore, I feel that so it might this examination also, right, there is a possibility where the examiner might give more weightage on this particular aspect, right, because that was visible. Now, for example, the previous two examinations, now this internal control question, now this has been increasing. So, therefore, so whenever you study the ethics part, then the quality control part, give more weightage on that one. Because there is a possibility, I strongly believe that there is a possibility where, so he might, give more attention, right. So, based on the current developments happening in the profession and the institute level into this particular area. So, therefore, now if you all have analyzed the last 2-3 papers or the last 2-3 years papers, now you can easily identify this. These 5 questions have been basically set or developed in these particular areas, in these areas, right. First one is on the planning, second one is on the audit evidence, and the whatever the other engagements. Third one is on basically the auditor's opinion, auditor's report. Fifth one is evaluating the internal controls, like the fifth one is ethics, right? Now we'll see the first question. Right now we'll go into the detail, right, and then we'll cover some of the theoretical aspect as well. First one is about this the questions on the planning, right? Question on the planning. Okay, now here, first question is on the planning, where right at the beginning, actually this particular document, if you want, I can share it with you all. I just compile a document, right? Detailing the areas that require your attention and all that. Is in the Word format. Otherwise, could I put it into this one? Where now one of the main thing what we should understand is, right, the rules on which auditors evaluate the financial statements are what? Sri Lanka accounting, the standards. Now we know that the management, whenever they prepare and present a financial statement, they make a representation. We call it financial statement assertions. I mean, actually you all have to have a very good understanding on the financial statement assertions, because now all these days the first question examiner goes on to say that identify the risk. Identify the risk. Second one is, right, so develop the audit procedures to address the audit risk identified in the given scenario. Now most of the time, even the last year I can remember examiner had reported, okay, most of the time the students identify the audit risk. They identify the audit risk. For example, the pawning, say the previous, I think the last year or last year December 1 or this year June 1, there's a question last year December 1, I think it was there, pawning, right? So the massive advances have been given, and there's a massive receivable on account of pawning, right? And when the lending was done, the value of one sovereign was 50,000. Now it has come down to 30,000. Now what implication in my, because examiner had given all that, then the students were required. The students had identified the fact that more provision now been required, because now the gold prices have come down from 50,000 to 30,000. So as a result, what happened, I think you all know what happened in practice. Most of the people did not redeem the article. For example, now you have say you had a 2 sovereign whatever an article. It was pawned and 100,000 was taken. Right? Now the gold prices have come down from 100,000. For example, it was earlier 55,000. Now it has come down to 30,000. Now if you want to go and redeem the article, you have to pay 100,000 plus the interest for that particular period. But now you can buy, say, 2 sovereign similar article from the market at, now the 1 sovereign is 30,000. 30,000 into 2 is 60,000, right? Maybe the whatever other charges, another 10,000, you can buy at 70,000 on the market, right? And if you go and redeem, it's 110,000. If you buy a new article from the market, it is 70,000. There, most of the people did not redeem it, right? So there was the provision, some of the organizations, some of the banks and some of the finance companies had to make massive provision because people did not redeem, right? People did not redeem. For example, 2 days before, here at the institute, I had a meeting with there again one of the very senior officer of a bank, right? Where I was saying that the last year itself they had a loss on the pawning amounting to 1 billion rupees, right? So because of this particular issue, so they had a loss of 1 billion only on the pawning, right? So therefore, now the particular question, the last year it was given. The students had identified this particular issue, but so the examiner had also reported that most of the time the student find it difficult to come up with the appropriate audit procedures to address the particular risk being identified. Now you say that identify the pawning, I mean the provision is being, okay, say the advances given on pawning may be overstated, or the provision required on account of pawning might have been understated. So likewise, you identify the issue, but you find it difficult to come up with the appropriate procedure. Now what the examiner was saying is, here, so the student find it difficult to come up with the appropriate audit procedure because they don't know the relevant financial statement assertion connected with the particular the item, right? So therefore, now this is very basic, no, right? So now you all might have done, you all might have studied the financial statement assertion at your CAP 1 level or a CAP 2 level, right? Now whatever those assertions, we divide it into two, right? Assertions applicable for, basically, for example, P&L items. Assertions applicable for example, balance sheet items and disclosures, right? Class of transactions, account balances, and etc. etc. In very simple terms, I said the P&L, balance sheet, and all that. So therefore, now for example, we should be able to identify what is the financial statement assertion connected with the particular item you identify, whether it be rights and obligation, or the existence, or the completeness, or the valuation. So likewise, you identify the particular financial statement assertion connected with the issue. So if you identify the financial statement assertion connected with a particular issue, you should be able to, or you will be able to identify or come up with the appropriate audit procedure for it. Now you all know that if the issue is on the existence, what is the procedure you got to follow? If the issue is on existence, for example, go and physically verify, right? So if you know it, you can easily come up with the appropriate procedure. But what the examiner was highlighting is, okay, they have identified, now they say that, okay, the pawning might have been, whatever the advances may have been overstated. And they come up with, do your analytical review, do this, check the closing balance, agree with the financial statement, or take the ledger balance. Now you got to write the, say for example, examiner says, write 2 audit procedures. Identify the risk and then write 2 audit procedures. Now see, the examiner saying these are the audit procedures students are writing. Check whether the closing balance in the ledger agree with the balance in the financial statements. Now is that an audit procedure to see, right, whether the provision required for the loan is sufficient, or whether the loan balance is overstated, whether the loan balance is understated. Now the examiner was saying that these are the basically the procedures students are writing, right? So that is why he is saying that, okay, now they like this, they write about 10 procedures, right? Now in these 10 procedures, right, none of the procedure address the main issue of, for example, existence, or a main issue of the valuation, right, or main issue of the rights and obligation, right? So therefore, now I am suggesting, please go and revisit. I mean, this is not a forum to, to teach you all the financial statement assertions which you did in your CAP 1 level this thing, right? So therefore, revisit into your whatever the auditing text you are having and identify the assertions connected with, right, P&L, balance sheet, and the disclosures. Therefore, whenever you all develop the audit procedure, for example, this is there, in your the final textbook, right? I know that because it is there in the even the new syllabus, the book, right? We have, for example, the financial statement assertions, right, and connected audit procedure, right? Now, in your textbook, it should be available, right? So, what are the financial statement assertions and what are the audit procedures you got to perform in respect of all these financial statement assertions? If it is existence, what is the procedure? For example, do a physical verification or go for a direct confirmation. Existence, you go and physically verify whether it is there, or you call for a direct confirmation from a bank. Bank confirm the particular balance is in existence. Or debtors, you call for a debtors confirmation, they confirm about the existence of the particular balance. So therefore, it's very easy for you all to relate, right? So and identify the financial statement assertion and then come up with the appropriate audit procedure. One other thing, if the examiner is telling you all, right, write 2 procedures. Now, for example, other than the last examination, all other previous examinations, right, examiner says identified high, say 6 audit risk or 8 audit risk, and then next question is write 2 audit procedures you got to perform to address the particular audit risk. So therefore, whenever you all write down the audit procedure, now there can be, say for example, 10 audit procedures you can perform. But what you all got to ensure is you all will come up with most appropriate and most relevant audit procedures in the given context. Now, for example, now checking the closing balance is also an important test, but is that really relevant in that particular case, right? Now you write, that one, trial balance to the, say for example, ledger to the trial balance to the accounts. Those are the 2 audit procedures you write. Do you expect the examiner to offer you the marks for that one? To check the, the accuracy of the, whether the loan balance is overstated or understated. So therefore, now you can probably write 10-20 procedures but you have to understand. That's why even the examiner here saying that the students haven't read the question, students haven't planned the answer, right? Students haven't planned the answer. Therefore, what I'm strongly suggesting you all plan your answer. When you identify the risk, then you all decide. There can be plenty of procedures. Now, identify, okay, what are the financial statement assertions relevant for this one, right? And then decide what is the most suitable, what is the most relevant, what is the most appropriate the audit procedure to address the particular risk. Now, if you all can, read and understand, like existence confirmation and the physical verification, others also occurrence, rights and obligation, what are the audit procedures, then developing that is very easy, right? So, therefore, please go through whatever the documents we are having, right? So, go through the documents that you are having and then see what are the relevant tests, and then in compiling the answer, ensure that, you compile the audit procedures which will be aligned, right? So, with the particular financial statement assertion, right? So, therefore, remember this is one of the main, the point which I wanted to highlight based on the comment given here, right? Based on the comment given here, as well as, what I heard from the students and examiners, right? So, therefore, one strong advice from you all, for you all, right? Identify risk and then come up with the appropriate procedures, right? And then to identify the risk, earlier I was saying that this particular question, many accounting standards have been tested. Even the last year examination, right? Last examination, there were a couple of accounting standards tested. Now, the last year December examination, if you will take the paper, about 9 accounting standards were tested, right? Take last year the June examination, about 8 accounting standards were tested in the first question. As I said you all earlier, accounting issue will always become an audit issue, right? For example, the financial asset classification is wrong. Say, for example, whatever the financial statement audited by you all, the particular accountant or a CFO of the particular organization have not classified the financial instruments in the right category. Now, we all know that based on the classification, the basis of valuation or where you got to recognize revenue and whatever it is, or the changes in the fair value will have to be or will be changed. For example, if it is at fair value through P&L, any gain will be recognized in your P&L, right? So, if it is AFS, right, any gain will be recognized in OCI, right? So, therefore, if the particular financial asset was not classified correct, so then you might not, whatever the numbers you present in your financial statement might not be correct or might not be accurate. So, therefore, it will become, so this particular accounting issue will become an audit issue. So, therefore, as I said, we had to at least, right, what I was earlier saying that we'll have to be very competent and knowledgeable about the accounting standard. But again, I know that most of you are working, right, and might not be having time to go through each and every accounting. For example, at this particular level, you might have already got through your AFR paper, or you might have completed your financial reporting framework paper where you all have completed, you all have studied all the accounting standard into the right depth and all that. So, therefore, now what you all got to do is revise what you all have studied. So, especially giving more attention or more focus on some of the standards which I said you all earlier, because those standards are heavily discussed in practice or in the profession at the moment. For example, one is on the LKS 39, right? LKS 39 on the financial instruments, because this is going to be changed, will be replaced with a new standard. So, therefore, many discussions are happening. Whether the classification of still most of the accountants, probably might not be aware of the right classification or the right accounting of, say, the financial instruments, right? So, therefore, the financial instruments, right, and then connected with that one is, right, what is the other one? Impairment, right? So, the impairment of, impairment, right? So, impairment of loans and receivables, right? So, impairment of loans and receivables, still we find it, still we find that, some accountants or some people are not yet that competent or that aware of this, the new impairment of loans and advances and receivables and all that, right? For example, whether you go for a individually significant impairment, right, or a collective impairment. taking or identifying loss given default rate, right? So coming up with the impairment allowance, etc., are yet to be, right, are yet, not clear for some of the people yet. So therefore, now this might be, examiner might, test still, since this is going to be changed again, the standard, the classification now is going to be from 4 to 2 is going to be reduced and all that. So therefore, there is a possibility the examiner test in this one. Second one is, what is fair value measurement? Right now, you all know that fair value measurement standard is in place now. So the fair value, how to determine the fair value? It can be PPE. So it can be, for example, investment property, right? Or it can be any other asset, biological asset, right? How to determine the fair value? The basis, right? So being an auditor, right, for example, client might come up with, the fantastic valuation. Valuer might, professionally qualified valuer might do the valuation. But again, right, the factors auditor got to decide, right, to see whether the valuation done by an audit, by the client's expert is acceptable, whether the basis of valuation is acceptable, right? So the etc. now is a concern, right? Heavily discussed at the moment. So therefore, so the fair value measurement is another standard. I think that I strongly believe that you all should be aware of, right? The next one is, the recognition of intangibles, right? Intangible assets, right? Intangible assets, lot of things, right? So whether the particular particular item can be recognized as an intangible asset. Nowadays, for example, things like whether right to use can be recognized as an intangible asset. For example, you take a land on 35-year lease, for example, or 50-year lease, right? So whether, for example, it's a land, you take on a 25 or a 50-year on a lease, right? Whether you can now, so we know that, so you can't recognize it as a PPE, or you can't recognize it as a lease asset, because at the end of the lease period, so the particular asset will have to be returned to the, for example, government. If that is the case, now you cannot recognize. Now you all know that, there's a substantial change in the leasing standard or whatever we have been using, but now the government offers you a land on a 35-year period. Now can you recognize it as a, say, the leasehold asset in your business? Now previously you all know that we had given a UITF ruling was given, right, where the long-term leases were recognized as a finance lease in the books. But now no longer new accounting standard permits it, right? The accounting standard, new accounting standard on leasing does not permit. For example, you might take a lease on 35-year. You might take a 35-year lease land. For example, now this, a lot of lands have been given by the government like that, right? Now 35 years or a 50 years or a 65 years or whatever it is. But how are you going to recognize that in your financial statement? Right? And there was certain argument saying that you can recognize right to use. Now, for example, when you take an asset on a lease, right? You take a land on a lease on the government. Government has given you a land on a 35-year lease. Now, certain people were saying that, so recognize your right to use the particular land as an intangible asset. Now, when you take a land on a 35-year lease, you have a right to use that particular land. So therefore, they were saying that, okay, determine the fair value and recognize it as an intangible asset, because land cannot be recognized as an asset in your balance sheet. It is not yours. At the end of the lease period, the particular land will have to be returned to the customer. So therefore, what they were saying is recognize this as a intangible asset, right to use the land. You have a right to use that particular land for a period of 50 years or for a period of 35 years. You determine the fair value of right to use the land or right to use the particular asset and then recognize it as an intangible asset. So therefore, the question like that might be posted to you all, right? The examiner might say that, okay, now you all have to see whether now the criteria stipulated in the particular standard on the intangible, right, is satisfied. If so, generally an item can be recognized as an intangible asset in the financial statement. So therefore, especially you have to be mindful, because since the similar issues were discussed at various forums, you all have to see whether, if a question is given, whether the particular criteria or the criteria given in the standard is in compliance in the given scenario, so that you can recognize it as an intangible asset. And then the impairment, earlier I said that, there is individually significant impairment, collective impairment, loss given default rate, all are require, they all require sort of an attention and then the related parties, right? Related parties, if you all, generally, so we all know that require a lot of attention because, even in the current context, right? So there were many instances reported locally and internationally, certain related party transactions have occurred, but the transactions have not occurred on an arm's length basis, right? Arm's length basis, therefore, is sort of an eye opener locally as well as internationally. So therefore, now being audited, so what is the responsibility of the auditor in respect of related parties? What are the responsibilities of the management in respect of related parties, right? So as you all know, it's the duty and responsibility of the management to ensure that appropriate systems and procedures are in place, or to introduce appropriate procedures and processes so that all related party transactions happening in the business organizations are captured. They are captured and then disclosed in the financial statement. So thereby the responsibility of the management. Then being auditor, what is our responsibility? Then our responsibility is to see whether the systems and processes established by the management to identify the related parties are appropriate. Now, it's not being the auditor, it's not my duty to go and introduce processes and procedures to identify the related parties. That has to be done by the management. Now, being the auditor, I also have a responsibility to see whether all related party transactions, all related party transactions are appropriately disclosed in the financial statement. So therefore, being the auditor, the first thing what I got to do is, I will have to review the existing policies and the processes and the procedures. Now, if the management has already introduced a process or the procedure, I will have to go and see whether the particular process or the procedure introduced by the management is sufficient or is appropriate or is adequate to identify all related party transactions happening, right? So there is a system, for example, if you will take our institute, there is a process. There is a process established whenever there is a related party transaction, whenever the payment is made, for a related party, related individual or a related organization is identified, right? And recorded in a related party, the register. Now, for example, this year I attended a seminar organized by Colombo Stock Exchange and Securities and Exchange Commission, where they were saying, it's not mandatory for the time being, they were suggesting to maintain a document called related party transaction register, right? They were saying, maintain a register. Whenever a related party transaction happens, you got to record that in the register. So it says, it's not mandatory, but they were suggesting. Probably they might make it mandatory in another maybe 2 to 3 years down the line. So therefore, whenever, for example, whenever they might say that whenever director sign a check or whenever CFO sign a check to a related party, so whenever a related party transaction happens, first of all, you have to record that in the particular register. So that at the end of the financial period, compiling or disclosing the related party transaction in the set of financial statement is quite easy. Because at the moment what happens is, I think, related party transaction disclosures, identifying transactions, disclosing, all that happens when the auditors start the audit, most of the time. Not that most of the business organizations are having processes to identify the related party transactions. That is how I think, what I heard, right? Many people are saying that, okay, that happens, related party story happens when the auditors come and start the audit. Then only secretaries and the CFOs and all that, going and, trying to identify the related party transactions. Not in all organizations, well-established organizations, they do have the processes. But again, what I'm saying is, so we have a duty and responsibility to see, to review the processes and see whether those are adequate, etc., and then see whether those are disclosed in the right context in the financial statement. Therefore, now this is an examinable area because in the current context, highly discussed topic. And then earlier also I said that, leases as a revenue recognition, right? Now revenue recognition standard is going to be changed, right? Change from the next year onwards, right? So therefore it's going to be new standard, right? A lot of new things have been made, sort of a, big change, right? Big change, new standard, if you compare the new standard with the standard we are having at the moment, right, there are quite a lot of changes, right. So therefore, now is a sort of an examinable area, right? And then the other one is the leases. Also I said that it's going to be changed, right? New standard is early it was there was a plan to introduce new standard in 2017, but I understand that they have the ISP they have extended the postpone the application date, but again there are locally and internationally there are a lot of the arguments or debates going on about the leasing standard. The fact that a lot of changes are required, bringing in these right to use this and that, lot of things, lot of discussions are going on. So therefore, I'm strongly suggesting you all basically to go through this particular standard on leases as well, right? And then few other the standards that have been regularly tested, So I did not very specifically record it here because you all are very competent on those those standards. For example, PPE standard. PPE is also normally in many instances it was tested. And then deferred tax standard, right? Now deferred tax, most of the students get an area very easy standard, but most of them find it difficult to understand. Even though it's a very easy standard, most of the people for example, if I check with the 10 students, very difficult to find 2 students, right, who understand the principle of the deferred tax standard, but a very simple standard, right? So therefore, now please revisit and see, for example, deferred tax assets, right? And what circumstances you can recognize deferred tax asset and etc., right? And circumstances. So therefore, I see whether you all basically are familiar, right, with that one. And finally, about the investment property, right? So investment property standard is also another standard, so which requires special attention. Okay, now one other thing what I highlighted, right, in the planning question itself, right, and even in another question, one other thing which I highlighted. Now you all might have also noticed that now the last year, now the group audit planning concept was brought in and tested and heavily discussed, right? Now say it was there in the first question and it was there in the third or the fourth question as well, right? So it was tested last time heavily, this group audit concept. Now you all know that if a group is audited, right, group of company, for example, now take Haley's, take the John Keel's, right? So take Haymar's, likewise there are fairly large number of groups, right? So we are the parent company and say for example, if you all take Haley's, under Haley there may be 100 subsidiaries. Take John Keel's, under John Keel's there may be 100 subsidiaries. Haymar's maybe 20-30 subsidiaries. There are very large number of group companies where now you all might have seen, for example, I have seen that say the parent, now even though Haley for example is having say 100 subsidiaries, now the Haley's principal auditor is Ernst & Young. So Ernst & Young might not be auditing all the subsidiaries, So if you take John Keel, there again the parent auditor is say EY, the EY might not be auditing all subsidiaries. But again, ultimately the parent auditor or the principal auditor is responsible for the consolidated audit opinion given. So therefore now when the Haley's PLC or the John Keel PLC prepare the consolidated financial statement, all subsidiary financial statements are consolidated. All subsidiaries are consolidated. They use the new process and consolidated financial statements are prepared, right? So then the parent auditor or the principal auditor will have to express an opinion on the consolidated financial statement. Parent can't say that okay, the principal auditor can't say that okay, this subsidiary X was not audited by me, or subsidiary Y is not audited by me, subsidiary Z is not audited by me. So even if they were not audited by the principal auditor, ultimately the principal auditor is held responsible for the consolidated opinion given. So therefore, now the principal auditor will have to ensure that sufficient or the appropriate audit procedures or the relevant audit procedures or the relevant steps have been taken to get the required comfort on the financial statement of the subsidiaries not audited by him. If all subsidiaries are audited by the principal auditor, will there be an issue? There won't be an issue, no. For example, if Ernst & Young is auditing all subsidiaries of Haley's PLC, then this particular audit issue will not arise, because they will develop the group audit strategy and they will identify the risk or the whatever it is in the group point of view as well as the subsidiary point of view, and they will handle it. But if the subsidiaries are audited, some of the subsidiaries are audited by one other auditor, this particular issue will arise, because they will work independently, right? Whether the work done by the subsidiary auditor is relevant or is appropriate, whether they have identified the relevant risk, whether they have performed the relevant procedures, whether they have come up with appropriate performance materiality, right? So likewise, all those are concerns of the principal auditor, because if the subsidiary auditor has not done a proper audit, ultimately, say the consolidated financial statement are material misstated, the principal auditor will be held responsible. So therefore, the principal auditor can't wait blindly. So the principal auditor will have to have a dialogue with the subsidiary auditor if the subsidiary is audited by somebody else, right? So therefore, now this concept was brought in last year. So therefore, now here the examiner, the comment says that, some of the questions relating to the group audit were not answered well also, right? So it says the students, have not answered well. So therefore, if that is the case, there is a possibility where the institute, the examiner will, because this probably must be shared with the examiner also, no? Right? So there is a possibility where the examiner might test you all with this group audit, right? Group audit principle as well, right? Last year heavily tested and the students have not performed well. You are leaving a room for the examiner to test this again in the current year as well. One other thing what we should note is, right, this clarified auditing standard, the auditing standard on this group auditing, there has been a significant change. When you compare the new standard on the group audit with the previous one, there are significant changes in the standard, right? That itself require the special attention on this particular, the standard, right? So that itself requires special attention on this particular standard. One other thing, now the last year it was basically tested in the local context, right? It was tested in the local context. Now this year, if the examiner wanted, now the examiner will bring in the, for example, foreign subsidiary audited by some other auditor, or a foreign branch audited by some other auditor. Now take, for example, now take, say, if you will take Aitken Spence, right? Now the Aitken Spence, now you all know that Aitken Spence, they are having some subsidiaries there in Maldives, right? Limited liability companies in Maldives, right? And so those are subsidiaries, right? So they are having some subsidiaries in Middle East, they are having some subsidiaries in India. They are, limited liability companies floated or incorporated in those countries. But those are not, so those might not be audited by, for example, here the Aitken Spence is audited by KPMG, right? So now those subsidiaries might not be audited. For example, subsidiaries in Maldives or a subsidiaries in India. They are having some subsidiaries in India also. They are having some subsidiaries in Middle East. Now those subsidiaries might not be audited by KPMG, right? Might be audited by somebody else. Now having a branch office, for example, commercial bank, take, they are having a branch office in, say the branch office in, say, Bangladesh, might be audited by, now that particular one might be audited by some other auditor, might not be KPMG, right? So therefore, now they can easily, now they, last year the examiner tested with the local context. Now, so if the examiner wanted to test this, right, since the students have not answered well, there is a possibility where he might bring in the foreign subsidiaries or the foreign branches as well, right, and might ask you all, right, how to deal with a particular issue, right. I just, identified few things, right, by going through this particular standard. Now, what I earlier said, the group engagement partner is responsible for the audit, right. Group engagement partner is responsible for the audit, for the consolidated financial statements, right. And, the new standard discuss about the significant components. Now, so read now you all have fairly good number of days for the examination, just read the standard. The examiner talks about the significant, standard talks about the significant component. For example, you might be having a subsidiary in, say, for example, in Maldives or in Bangladesh or in Middle East, right? In terms of your net asset or the profit or say the revenue, if you take it as a percentage, if it is less than even 1%, who bothered, right? Principal auditor might not be bothered about it, because it might be, for example, total revenue or the total net asset or a total profit of the particular subsidiary might be even less than 1% of your consolidated revenue or a consolidated profit or the consolidated net asset. So therefore, Now here it goes on to say that it talks about the significant component. Auditor got to identify what are the significant components or what are the significant subsidiaries. That is the first call auditor will have to take. Whether the particular foreign subsidiary is a significant component or a significant subsidiary. So if it is a significant subsidiary only, the auditor will pay more attention toward the particular audit. For example, now there are many things now you all got to consider if it is a foreign subsidiary or a foreign branch, right? So because now in Sri Lanka, now we all know that, say in our country, so we have all, the latest clarified auditing standards we are using, right? We are using all latest clarified auditing standards. We are using IFRSs, latest version. Now assume that, say you are having a subsidiary in Maldives. Now Maldives is using, for example, 2001 version of auditing standards. Their legal framework is such that they prepare their financial statement based on, say, 1999 version of accounting standard, right? Now those accounting standards, for example, they don't deal with the impairment concept. It's not there because their legal framework is such that they go by 99 standards. Now that time the impairment standard was not there, right? Now for example, the auditing standard they are using, and some of these auditing standards might not have been there. So therefore, some of these very essential, the adjustments or whatever, right, that should have been done in the financial statement might not have been done in those financial statements, right, prepared and audited by that particular, the audit firm in that particular country. You can find fault with that particular audit firm because they did it based on the legal framework prevailing in that particular country. So therefore, if a situation like that arises, how will you all handle it? For example, you are having a subsidiary, they are in Maldives, you are the principal auditor. Subsidiary is audited by, say, another audit firm. There the legal framework is different. There the accounting framework is different, right? Auditing framework is different. For example, in our country, we know that the auditing, so we have accounting and auditing standard monitoring board, they are coming and checking our working paper files. For example, they are sending letters, nice letters, come and visit us, with your working paper, this and that. I have also, been to the monitoring board couple of times. We take our file and go. There are, a few technical managers. They take our file and they, have a chat. They go to the working paper file 3-4 hours, right? And at the end of the session, they have a, chat with us and then followed by a letter, right? Later, we take them positively because it's a value addition. Actually, it's a value addition. For example, whenever I am called for an interview by the monitoring board, I am very happy because whenever the working paper file is gone through by an independent person, right, they will give us, they will see certain things that we might not see, or they will see certain things that require real improvement in our processes, right? So therefore, we take them positively. We know that, okay, this thing is, we know that we are subject to, for example, whenever I audit a listed company, or for example, special business enterprise, I know that I am subject to audit by monitoring board. I am subject to audit by institute, for example, quality control team. I am subject to audit by Colombo Stock Exchange. Whenever I know that I am subject to audit by many people, right, I will ensure that I will do a proper audit. I will do a proper audit, right. I will do a proper good audit in compliance with all these legal framework. Now the country you are referring to, for example, Maldives, right, you are having a foreign subsidiary, right, audited by somebody else, right. So the legal framework does not require, there is no system, of quality control. There is no system of quality control, nobody checks your financial statement, they audit the way they want to, right, etc., etc. Auditing standard, in 1980s and 90s, right, accounting standard, all these old stories, right, then how are you going to consolidate? You can consolidate, you get a financial statement. Being the principal auditor, what aspect you got to consider? So therefore remember, now these are sort of, the areas examine if necessary, right. Because some of the practical questions, right, practical questions, right. For example, some of the Middle East countries, I can remember, I met a member, right, he was saying that one of the Middle East countries, right, he was saying that, his membership number in that particular country is number 1, right. They said, okay, we don't have a standard as such, right. So when I look at it, I can say that whether these accounts are, sometime back and or recently, I can say that whether the accounts are correct or wrong, right. So, your subsidiary might be operating in a country like that. There might be, for example, there might be no standard, or there might be standard where, for example, those standards might be very historical. So, therefore, there is a possibility where the examiner might test you all on this particular area, because this is tested in couple of instances, right? So, therefore, think about, since examiner wanted to, expand this test in this particular area, he can bring in the foreign subsidiary, right? So, therefore, look into that one, especially now the significant component. So, what the standard says is, group engagement team or the component auditor shall perform an audit of financial information of the component using performance material. Okay, what it says is you identify the significant component, and once the significant component is identified, you identify the performance materiality. It's like now you all hearing first time these things, right? Look like this, right? Now you have 2 weeks to go for the examination, might have read this particular standard 10-20 times, right? Right? You got to identify the performance material of the subsidiary. All these analysis you all should have done actually by now, right? By going through the last 3-4 papers, right? I did it within 3 to 4 days, right? So therefore now the performance materiality, you identify the performance material, the relevant significant components, right? And you base your audit on that one, right? And say the audit of the balances, account balances, and the class of transactions of those significant components, right? And the specific audit procedures need to be performed for significant risk items, right? In the significant component also, not that you should be auditing each and every item. I say significant component, you identify the area that requires special attention. In this particular context, whenever the principal auditor prepare the group audit strategy, the principal auditor will identify basically the area that requires special attention. Whenever principal auditor identify the relevant, the risk areas, probably a principal auditor might communicate to the component auditor. For example, if I am the principal auditor, it is my duty to do the audit strategy for the group. When I do the audit strategy of the group, I might be going through the draft financial statement of all subsidiaries, including the parent. And then I might identify certain areas that require special attention in the audit. Now, some of the areas that require special attention in the audit, so might be they are in a financial statement audited by another auditor. In a situation like that, what the principal auditor will do is, he will communicate that to the relevant component auditor. Because principal auditor identify the fact that, okay, this is a special area that require, this is an area that requires special attention. He identified it, but that particular one is not audited by him, audited by somebody else. So therefore, he communicates that to the particular component auditor, and might get the particular component auditor to go through it and do the needful. So therefore, see that the required areas, not all areas, the special areas with higher risk, or the area that requires special attention, will have to be audited in detail based on this provision given in the standard. And it goes on to say that the consolidation process, right? Being the principal auditor, now you have the subsidiary financial statement, you have the parent financial statement, then the consolidation will have to happen. So therefore, now if the principal auditor is expressing an opinion on the consolidated financial statement, principal auditor will have to see whether the consolidation process is happening properly, happening correct. For example, you can issue a consolidated audit opinion. Before that, you have to see whether the consolidated financial statement prepared by your client is accurate. Because, for example, there can be, say, subsidiary, there can be sub-subsidiaries, this and that, 80%, 60%, 100%, 51%, and there can be situation where your holding is less than 50%, but yet you might be having the controlling interest. You might have the right to receive the variable return, now the new definition given in the standard. So likewise, so there might be various things, and there might be lot of transaction in between this parent and subsidiaries, and subsidiaries. So therefore, in the consolidation process is a massive process. I can remember one of batchmate of mine, was there early at one of the big four firms. He was saying that he was auditing, he was doing the consolidation of one of the leading big company, right? was saying that, he was those days, he was sitting for 1 month, like, doing, checking only the consolidated financial statement. He was saying the separate team is auditing. My duty is to see whether this consolidated financial statement is correct, right? So therefore, because to do that, now like the related parties, now there has to be a mechanism where the auditor will have to see whether all the intercompany transactions have been identified and recorded. Because if the intercompany transactions have not been identified and recorded, you will not be able to do a proper consolidation. And then probably auditor might want to see whether those the intercompany transactions have been properly approved and documented. Generally, is a related party transaction, right? So therefore, whether transactions between those two parties, right, have been recorded and approved at the appropriate level, right? And then whether in the consolidation, whether they have been eliminated as appropriate, right? Intercompany transaction will have to be debtors, creditors, and the intercompany sales and purchases will have to be eliminated. And if there is a profit, unrealized profit on this thing will have to be eliminated and adjusted. So likewise, we'll have to see whether those adjustments, right, whether those adjustments have been done accurately, right? So therefore, the consolidation process itself requires, because that has to be done by whom? Management might do the consolidation and give it to you, but ultimately auditor will have to see whether the consolidated financial statement prepared by the management is accurate. Now, whenever you all might have done the audit of the consolidated financial statement, our client might give you the consolidated accounts, right? Now we have to see whether the consolidation is correct, no, right? That is what that's referred by the standard here, right? And the communication with the component auditor. So here, the standard goes on to say that, now this probably might be very useful there again for you all, right? Communication with the component auditor. Now the principal auditor in quite often will have to communicate with the component auditor. Say well before the audit is started, now we'll have to communicate with the principal, say the component auditor. Say we are going to start the audit, this is the deadline, this is these are the basically the ethical principles. You have to be independent, because generally the principal auditor communicate that, For example, I am auditing subsidiaries of the leading companies where the principal auditor, for example, on the big firm, they are sending us the letters and the relevant consolidation packs and all that. They are communicating, okay, we are starting auditing this particular date. Now this is the process, and you have to be independent, this and that. All these are communicated by the principal auditor to facilitate, right? Facilitate the component auditor to do a proper audit, right? So therefore, the dialogue will have to happen, right? Those will have to be communicated, right? Say it says, okay, the ethical requirements and the component materiality. He communicates this component materiality and the risk of material misstatement identified and relevant, right? Earlier I said that, now I said that, at the group level, the principal auditor might identify the area that when he developed the overall audit strategy for the entire group, principal auditor might identify the area that requires special attention. Now, for example, I am auditing a subsidiary. Now, in respect to this particular subsidiary, principal auditor might have identified certain area that requires special attention. If that is the case, principal auditor will communicate to me in writing. Okay, look here, when you are auditing this particular one, pay more attention toward this, right? So that will be very useful for the component auditor, even principal auditor, because principal auditor can ensure that those the special areas are audited well or audited appropriately, and those are resolved properly. So therefore, those will be communicated, and then most often, right, they send the list of related parties, right? Because identifying the related parties, identifying the related party transactions will be really helpful. One is for disclosure purpose, other one is for the consolidation adjustments, right? For example, that might be having another subsidiary, it can become a sub-subsidiary, there might have been transaction between those, right? There can be intercompany transactions, unrealized profit and all that. So therefore, to identify those transactions and to ensure that those are appropriately disclosed, right? So the related parties are also being communicated. Likewise, regular dialogue will have to happen between two, basically to ensure that proper audit is happening. Okay, it's about the documentation, right? Then those will have to be documented, this and that. And especially in your standard book, so they are given some of the areas, especially in page number 758 and 759, right? Some special areas, special matters to be considered by the principal auditor. Because of the time, I'm not going through this one in detail. The rest of it, 758 and 759. Read the 758 and 759 2 pages. they give you all quite a lot of things about this subsidiary audits, or the component, the group audits, where the principal auditor will have to pay more attention. Next one. Now, in the same thing, now if, for example, principal auditor is not satisfied the work done by the component auditor, right? If the principal auditor is not satisfied with the, say, for example, work done by the component auditor, if the principal auditor is of the view that the work done by the component auditor is not appropriate or are not sufficient, what he got to do? So auditor is a component auditor, a principal auditor is of the view that work done by the component auditor is not sufficient or are not appropriate or are not enough, kind of, right? If that is the case, what he got to do? Ultimately, he can't say that that was done by him and I can't take the responsibility, it was not appropriate, this and that. Ultimately, the principal auditor will have to take the responsibility. If we feel that the work done by the component auditor is not good enough, not sufficient, not appropriate or whatever, right? The principal auditor will have to perform additional audit procedures and he got to get this required comfort, right? So probably he might not be able to direct the component auditor, look here component auditor, your work is not sufficient, go and audit this again, right? Go and do this particular process, go and do this, might not be possible. I feel that anyway, it's not unlike, it might not be possible. So therefore, the principal auditor will have to understand he is self-responsible if something goes wrong. So therefore, if that is the case, I think the principal auditor, the standard goes on to say that principal auditor will have to perform additional audit procedures and, right, he will have to get the required comfort or collect the required audit evidence and get the required comfort to to ensure that the financial statement of the particular component is not misstated, right? So therefore, you all have to be mindful on that one also, right? Okay, that I felt that this particular area, since is heavily tested in 2 questions, will be important for you all. So therefore, go through those. I basically highlighted quite a lot of things, but in this particular standard is about 30 odd pages, right? News about 30 odd, it's about almost 40 pages, right? So fairly big standard, but very useful standard as well, right? So therefore, suggest you all to read especially those 2 pages, right? And the entire standard you all can read. Then and identify the assertions and design in the audit procedures, we basically discuss about them, right? And the next one is, that's about the first question. I mean, quite a lot of things we discussed. So we'll get into the next one. The new the question the examiners tested in the last 2 examination. Examiner was giving you all a question on an internal control system, right? Or given a process, how the particular process is happening, how the particular process is operating in an organization, right? And the process is being given, right? Process is being given, and then you all were required to identify the deficiencies in the particular system. Now, for example, examination before the last examination is started and given a system of an NGO, if I can remember correct, right? Yes, NGO, given a system, this is how it happens. This is how the cash is collected. This is how the payments are made. This is how the payments are approved. Now, look at the last, not the last examination, before the last examination also there, right? So how the particular process is happening is given, right? And then requires the students to identify the deficiencies in the internal control system or deficiencies of the particular process, or what could go wrong in the particular process, right? So therefore, now the examiner started with the last, the 2013, the paper, right? Last examination he has continued. So therefore, now the way the papers are structured, I feel that, so this will be probably, there's a possibility where examiner might, so go on the same basis, same line, where he might test you all on this particular, the basis as well. So therefore, now there is, I mean, as far as the questions of this particular nature is concerned, that is why there again that particular report says the students appears to have, basically not considered the practical aspect of it, right? Where what it says is they don't have the practical experience, right? They don't have the practical experience to identify the deficiencies. They don't have practical experience to suggest the improvements required. That is why even previously I said that, to answer, come up with a correct answer or the more relevant and appropriate answer, you all have to have very good experience into different processes and activities, right? So therefore, now say I don't know whether the book is available, right? Especially now at the moment in our syllabus, so we don't have a separate none of the auditing, I mean it's not in the CAB 1, CAB 2 and even here, processes are not taught now, right? Processes are not taught. Now previously, for example, how the payment process happened, how the revenue process happened, right? How, for example, the procurement process happened. So likewise, now if you all take a business organization, it's basically a collection of processes, right? Payroll process, the payment process, procurement process, and the revenue process, fixed asset process, inventory process. Likewise, it's a collection of processes, right? Now, if you all know how the particular process is happening, generally how the particular process is happening, it will be quite easy for you all to identify the deficiencies of a given process. You all know basically generally how it happens, how it should happen, right? If you all know how it should happen, then whenever a process is given where the way it is done is not the way it should happen, then you all can easily relate it and you all can easily identify it, right? Now I know that in the new syllabus of ours, there's the very basic level, but again it will be quite useful. Now especially when it comes to this one, right? So we have a paper K4, right? Is about the business processes, right? Business processes and ethics and assurance, right? Where all these processes are being discussed in detail, right? I'm not asking you all to read now you all might feel now we are at S2 level. Why the hell we go and read the basic level processes? Now what I'm suggesting is, now the intention is, now given a control system is being given or how the process is run is given, right, and identify the deficiency, right? If you all want to identify the deficiencies, you all have to have a very good practical experience into the processes. Now for example, now those who are in the auditing, basically say for example I would say the audit firms, right, might have done a lot of process audits. For example, whenever you go for an audit, right, now one of the requirement is go and see how the particular process is happening, right? So we say identify what could go wrong, this and that, is been done, right? But for example, there can be sizable other students who are into the non-audit sector also, right? Now, for example, non-audit sector, the student, right, might be assigned, right, for example, preparing the financial statement, right? Now, throughout his training process of 2 years or the 3 years or whatever it is, he might be preparing the financial statement, right, or preparing the bank reconciliations. Likewise, right? So might not have might not have the experience or the exposure to the processes taking place in the organization. So therefore, what I'm suggesting is for those students, right, those who did not have or who do not have the required the exposure, right, into the processes happening, if possible, now get hold of this particular book, right? I think this must be available at the institute, the library or the bookshop, right? Or this one. Small booklet, all the important processes have been discussed, just it will take maybe half an hour or 1 hour for you all to read that one, right? Just again, see the sequence, how the particular process is happening, revenue, payment, and etc. etc. So that will be really useful for you all to identify. Okay, forget about it, right? Now here the what examiner has been doing is given the process, and I require you all to identify the deficiencies and write or come up with the recommendations as to how to overcome the deficiencies identified. Therefore, I can't exactly say all this is how to do it, right? So it has to be done based on the proposals, the recommendations will have to come based on the deficiencies given in the case or given in the scenario. For example, take the last year December examination, right? This particular NGO, it goes and say that the payments, whatever the invoices are directly sent to somebody, and therefore on the face of it, whenever you all read that, you can identify a lot of the deficiencies, right? But again, experience, if you all have a proper experience, when you read that, you all can identify quite a lot, and then come up with quite a lot of recommendations also. So therefore, to what extent you all can identify, to what extent you all can come up with the proposals will depend on your exposure and your basically, now your, even if you all don't have an exposure, that's why earlier also suggested, now answer, now probably other professional examinations also, this particular paper for example can be ACCA, can be England and Wales, so similar questions might have been tested, or a similar question might have been there. So therefore, read them as well. Whenever you all read them also, now for example, they also read those questions and you all can check with the answers given. Now they might have given you also, for example, half a page process and might have asked what are the deficiencies, etc., etc., right? And then the answers might have been given, okay, these are the deficiencies in this particular process, right? And these are the recommendations as to how to overcome the particular control, or sorry, particular deficiency, right? Kind of a feedback or a kind of an answer may have been given. So therefore, go through it, right? So that will also be quite useful. Now, basic technique that we do in practice is, now whenever you review a particular process, you identify, you ask this particular question, what could go wrong in this particular process? That is why so that is a normal terminology we use in practice. No, you review, okay, this happened like this, right? So if it happens like the way it is given, what could go wrong? What could go wrong? What mistake or what fraud or what error can happen in this particular case? So therefore, evaluate in that particular line, right? What can go wrong, right? Okay, so this if it happens like this, okay, this particular issue will arise. If that particular issue arises, now how are you going to address that one? What you got to do to address that particular issue, kind of a the answer will have to be given. Actually, this is very meaningful and very useful in practice also. For example, whenever you go and work as an accountant, right? Whenever you go and take up a position of a finance controller, accountant, or whoever it is, right? So then get into a reorganization, you all basically might want, right, to see how the processes of the particular organization is happening. You are taking over as a new accountant, right? How the processes of this particular organization is happening, and then identify the deficiencies and then come up with the appropriate controls, because ultimately it's your responsibility. We say it's the responsibility of management to come up with appropriate internal controls, right, to address the frauds, errors, etc., etc. So therefore, how should I do that? Because it's my responsibility if I am an accountant, right? So therefore, ensure that evaluate in that particular line, right? What could go wrong? So require more experience. That is why I am repeating several times to say that answer questions as much as possible, right? Need not necessarily be only our papers, but you have to write answers, not checking the answers, right? Okay, so do that. That will be really helpful for you all to do that, right? And then the third one, right, is about always there has been a question on audit opinion, right? Now there has been a question on audit opinion the last time and year before last time. What kind of an audit opinion? Now this is a fairly simple and straightforward question. I don't know why the students are not taking. He also highlighted the students are not taking the full mark for this particular question. Now you all know that once say for example, we identify the risk and then we develop the audit procedures and then we collect the audit evidence, and finally we evaluate the audit evidence gathered and then decide whether we can express an unmodified audit opinion or a modified audit opinion, right? If you are fine with audit evidence we have gathered in respect of whatever the risk we have identified, auditor will express an unmodified or a clean opinion. We say auditor will express a clean opinion. But there can be certain circumstances where the auditor will have to modify the audit opinion, or auditor will have to express a qualified audit opinion, or a modified audit opinion he express, right? Now these the circumstances that will require the modified audit opinion have been divided into two, right? The circumstances that require modified audit opinion have been broadly divided into two, right? What are those two? One is the one is for example the circumstances I am asking, right? One is the disagreement, other one is the limitation of scope, right? Now if there is broadly two, right? One is the disagreement, right? There is a disagreement with the management. Second one is the limitation of scope, right? Now, if you will take the first one, disagreement between the management and the auditor. Now, the management, for example, now, so when the auditor audit the, for example, receivables, when auditor audit the receivables, auditor is of the view that, say, the 50 million will have to be, say, provided, or 50 million will have to be charged to the P&L on account of impairment of receivables. But the client says, okay, no, 50 million need not be provided, he will do this and that, he can collect and all that. So, therefore, auditor, the management disagrees, right? Management says that, okay, no provision or no impairment will have to be done for receivables. He is confident that everything can be recovered. But auditor is of the view that no, based on the objective evidence and etc., etc., auditor concludes that 50% allowance will have to be made to the P&L on account of impairment of receivables. Now, there is a disagreement. There is a disagreement between the two parties, right? Now, if the disagreement, auditor says we will have to charge and the management says, right, no need to charge. So, therefore, now if the disagreement is, now we will have to see whether it is a disagreement or the limitation of scope. Disagreement, now in this particular disagreement, if the disagreement is material, it goes on to say that we express an qualified audit opinion. It is a disagreement which is material to the financial statement, right? We express an qualified, it is a material, this 50 million is a material to the financial statement, you express an qualified opinion or except for opinion. If that is only one, you say except the trade receivable. Now, auditor might say that, so he could not verify, right? Or the 50 million allowance for impairment has not been made in the financial statement, and then except for this one, the financial statement shows true and fair view, right? Is a except for opinion, qualified audit opinion. Second one, right, is a disagreement, but is material and pervasive. If material and pervasive, what will the auditor do? Is an adverse opinion. Is an adverse opinion, very clear, right, straightforward. Is a material, and for example, this trade receivable is 80% of your, say, the balance sheet. Or if it is charged to the P&L, your profit will be converted into a massive loss. Your balance sheet, the value will significantly come down. So, therefore, if you are of the view that, so this is material and so pervasive, you will express an adverse opinion, where you might say that financial statements do not show true and fair view, right? Adverse means, auditor. Now, we have to be very clear, right? Adverse means auditor will say that financial statements do not show true and fair view. You have to say that, why. First of all, you have to record the fact that why you are saying, right? Then you have to say the financial statements do not show true and fair view. Second one is a limitation of scope, right? Now, the auditor scope is being restricted or limited by the client, right? There again, limitation can be circumstances, right? Limitation can be imposed. There again two, right? By the management. Second one by the circumstances, right? For example, the first one, say by the management. Now, the normal, the example given in your auditing standard as well, say that, you want to check you want to call for the confirmation from the receivables, so your customer, your debtors, right? Other audit procedures were not sufficient. I mean, other audit procedures did not provide you with the required audit evidence. So, therefore, so you decided to call for the confirmation from the debtors of the particular client. But a client does not agree. Client says that, okay, does not agree. The client says, okay, don't call for the confirmations. Client says, don't call for the confirmation, and client will not give you the required name, address, this and that, and client restrict you in calling the confirmation from the debtors. So, therefore, the scope is being limited by the management. Your scope is being restricted by the management. There is a limitation of scope imposed by the management. Management say don't do it. Something you should be doing, you have already decided to do, management say don't do it. So, therefore, the management has imposed a limitation. Second one is limitations imposed by the circumstances. It's like, for example, now say you are auditing a client, right? So during this year, the particular financial period, there was a fire broken out, right? All the books of accounts and the supporting documents have been destroyed, right? All the supporting documents have been destroyed now, right? Now the set of financial statement is there, but again to audit the numbers show the supporting documents, none of the supporting documents are available, right? So therefore now there is a limitation, but the particular limitation is not imposed by the management, it's by the circumstances. For example, the fire, all these documents were destroyed. Tsunami, all documents destroyed, right? Limitation imposed by the circumstances, but whether it be circumstances or by the management, right? So what happens is, if it is material to the financial statement, you go for an except for opinion. You go for except for opinion. You say that for the other than the particular the issue, other show true and fair view. But if it is material and so pervasive, right? What will you do? Right? Is a disclaimer of opinion, right? In the disclaimer of opinion, what will the auditor say? An adverse opinion, auditor will say that financial statement do not show true and fair view. But in the disclaimer, what will the auditor say? The auditor does not, I will not express an opinion on the financial statement. Why? Because auditor does not know whether the financial statement, now in the previous case, adverse opinion, auditor knows that the financial statements don't show true and fair view. Because auditor knows, they have gone through the document, this and that, auditor knows that financial statement do not show true and fair view. But in this particular case, you could not collect the call for the confirmation. If you manage to get the confirmation from the debtors, you could have concluded whether the financial statement shows true and fair view or not. Now, since the confirmations were not called, since the auditor did not get the confirmation, so auditor does not know whether the trade receivable shows true and fair view or not. For example, it might show true and fair view. We might not know, right? For example, all documents were destroyed due to fire or flood or for tsunami. So therefore, now if the documents were available, documents are not available. Since the documents are not available, auditor does not know whether the financial statement audited by him shows true and fair view or not, because the documents are not available to see whether this is correct or wrong, whether this shows true and fair view or not. So therefore, now this is very simple, the audit opinion, but this is very simple this thing, right? So therefore, now what you all got to do is, you all have to have there again some hands-on experience in writing some audit qualifications, right? Now, so the auditing standard has given some guidelines for you all, right? Auditing has given you all some guidelines or some proposed wordings of audit qualifications. But in addition to that, I am suggesting you all some of the listed companies, right? Some of the listed companies say the audit opinions are heavily modified. Now, for example, most of you all must be working in the audit sector, and some of you might be working, in the corporates. But anyway, getting hold of a couple of companies where the audit reports are modified by the audit firms, right, might not be that difficult. So therefore, in an auditing standard, okay, anyway, the international standard, we have sort of international wording and all that, right? But again, if you all go through a audit done by a firm, right, and qualified audit opinion given by a firm here in Sri Lanka, I think that will be really useful for you all. Go through a couple of audit reports and see how the qualifications are worded, how what are the items that have been qualified, how those are worded, how those are written. That will be quite useful, because the examiner might ask you all, okay, develop the whatever the audit qualification required to be put in, right? So kind of a question might be given. So therefore, get this thing on that one as well. Then with this one, a couple of other things will take it under this one. Material misstatement in opening balances and corresponding figures, right? Now this is, I believe that is another area where examiner can combine, right? Combine this one with this audit opinion question, right? One is, before that, the going concern, right? What is the going concern? Going concern can be combined with this the audit opinion question, right? Going concern, the other one is the opening balances, right? Going concern and the opening balances. Now there again, so being the auditor, will have to have a clear understanding as to what is our responsibility pertaining to going concern. Now the standard goes on to say that the management will have to evaluate whenever they prepare a financial statement. So they have to evaluate the whatever the facts and the information and see. They have to make an assessment. That's what the standard says. They have to make an assessment and see whether the particular organization is a going concern or not. Right? If the management or the directors conclude that the business is a going concern, they have to prepare a financial statement on the basis that the business is a going concern. Now this assessment is done by the management, and based on their conclusion, they will prepare a financial statement. Now being the auditor, what is my duty? Now for example, management has prepared a financial statement saying that they are a going concern, and therefore on that particular basis the financial statement have been prepared. Now in our case, now first of all, before coming to the auditing, now first of all we should know, so what is the difference? What are the differences, right, of the reporting in the event you conclude that you are a going concern and you are not a going concern, right? Now we know that there are a few differences. The basis of preparing the financial statement change based on your conclusion as to whether you are a going concern or not a going concern. For example, if you are a going concern, right, so you can prepare your financial. For example, if you are a going concern, you conclude you are going concern, all your asset will be shown, non-current asset will be shown at cost minus accumulated depreciation and accumulated impairment loss, and the assets that will be divided into current and non-current, liabilities into current and non-current. But if you are not a going concern, right, all asset will become current asset, all liabilities will become current liabilities, right. As the assets are concerned, all assets will have to be shown at net realizable value or the realizable value. But if you are going concern, is cost minus accumulated depreciation and impairment loss and all that. So therefore the basis of preparing the financial statement will have to be changed. So therefore, being the auditor, right, so I have a responsibility to see that whether the conclusion drawn by the management, right, whether the conclusion drawn by the management after their assessment is appropriate, whether the assessment is correct, right. So if the assessment and the conclusion both are correct, then being the auditor, I need not worry, because I know that they have done the assessment, they have arrived at a conclusion saying that they are going concern, that conclusion appears to be appropriate. If the conclusion is appropriate, I am fine. But the issue is, if the conclusion is not appropriate, now they have concluded that they have going concern, right, they are going concern, but there are certain doubts, right. So there is so for example, now the standard gives us the three scenarios. One is management has concluded that the entity is a going concern, but when you evaluate it, yes, you feel that yes, the entity is a going concern, but there is an uncertainty. There is an uncertainty, but in the financial statement, that uncertainty is been appropriately disclosed in the financial statement. If that is the case, what we got to do? You have to basically perform some additional audit procedures and that. But finally, in the financial statement, what will you do? Yes, it has to be an emphasis of matter, because going concern is appropriate, right? Going concern is appropriate, but there is an uncertainty. But that uncertainty is been disclosed in the financial statement. Therefore, you will basically put an emphasis of matter to the auditor's report or your report. Second one, going concern is appropriate, there is an uncertainty, but a disclosure is not made in the financial statement about the uncertainty. Then what will you do? What will you do? Modify the audit opinion. Modify the audit opinion, right? So it goes on to say that either qualification or an adverse opinion, right? Either qualification or adverse opinion. If it is very significant, right, go for an adverse opinion. If not, go for an audit qualification, right? Third one, it says now the management has concluded that it is a going concern, but auditor, when evaluate, identify the fact that organization is not a going concern. They have concluded that company is a going concern, but auditor evaluated, because auditor perform further audit procedure, this and that, and identify the fact that organization is not a going concern. If you are not a going concern, the management has prepared a financial statement on the basis of a going concern, what will the auditor do? There again another adverse opinion, because they have prepared a financial statement on the basis of a going concern, but actually in fact the company is not a going concern, right? So therefore likewise now this is what the standard is, relating to going concern, relating to audit opinion, right? If you can remember this thing, that's it, right? So therefore now in the examination, think, read the question and think independently, right? With a clean mind, and then come up with this thing, right? Then we will take the similarly opening balances, right? Opening balances, what is our duty? For example, previous year financial statement was audited by somebody else. This year you audit the financial statement. Now what is the auditor's responsibility in respect of opening balances? Yes, we will have to ensure that the opening balances are not materially misstated and the accounting policies are consistently applied. That is the auditor's the opinion. If, right, now if the last year, previous year financial statements were modified, right, the last year financial statement modified because last year balances, right, the last year balances will be carried forward for the current year being opening balances. The last year audit opinion was modified. So what we got to do? Present year auditor, current year auditor, we leave it, we forget about it because it was last year auditor's report. Yeah. How do you decide? Okay, now if the last year, yes, if the last year the audit opinion was modified by the auditor, last year auditor, right? Now how are you going to deal with in the current year audit? Forget about it. Check the applicability. Okay, and then okay. This year will have to be modified. Okay, whether the qualification should remain in the current financial period. Okay, any other answers? Okay, yes, identify. The first thing is you have to see whether that is what first thing we'll have to do, right? Identify and see whether the matter is resolved in the current year. So if it is resolved in the current year, what will you do? No modification is, right? If the matter is resolved, right? If the matter is resolved, no modification might be required. If the matter is not resolved, what will happen? The matter is not resolved, yes, and then and this is not complete, right? By now, you all should put other matter means what? Okay, any other answers? What do you all think? 2 more weeks to go, right? So they can be opening balances can be easily combined with the audit opinion question, right? Can be easily combined with this one, right? See that the previous year audit report was modified, audit opinion was modified. So this and that, so how to do, so this year what to do, right? So he might not ask what to do, but again he might say last the audit opinion was modified and it was not resolved, this and that, So how to handle with it, right? So therefore, I will leave it with you all to go home and read. I'm telling everything. Okay, now the next one is, right? Say, okay, those were basically the areas that can be tested along with this auditor's opinion. The opening balances or the corresponding figures, right? And the going concern can be combined with this one, and there's a possibility where examiner, because the audit opinion has always been tested, right? Has always been tested because actually it's a really important area where definitely it will be tested, audit opinion, because if you take the last so many papers, every paper, so this has been tested. Therefore, a good understanding on all these areas is really required. So therefore, focus on those, because very simple area where you all can score fairly good number of marks in this one. Then the next one, if you all take the evaluating the audit evidence. So there are many instances where the question was given on evaluating the audit evidence. So most of the time question number 2, right? Evaluating the audit evidence, right? Or a scenario is given, right, and ask you all what audit evidence need to be gathered to address the particular issue, right? For example, take the last year and year before, right? And the 2013 the 2 question, 12 2 questions, right? So the papers, right, always a question is been given, scenario is given. The examiner wanted you all to see what audit evidence need to be gathered in support of the particular issue being given, right? There again, now to compile an answer for this kind of a question, right? More practical experience into the audit issues, right? Audit issues or audit evidence is really required. Now, most of the areas I feel that when I went through the past papers and the documents, but I felt that here the main focus will have to be what is more reliable evidence in a particular circumstances. The examiner is asking, there can be many audit evidence you all can gather, but what is the most relevant and appropriate audit evidence in the given circumstances, right? Like in the previous case which I said, But with this, right, these are the areas I feel that which has been really tested on a regular basis. Use of management representation. Now, most of the time, right, we always insist management representation, right? The easiest way is, so most of the time, okay, get a representation, right? Get a representation. But is that representation, right? Is that can you, to what extent you can rely on the representation? So is that consistent with other audit evidence, right? Because what it says is, okay, if other audit evidence is not expected to be available, if other audit evidence cannot be reasonably expected to be available, is like the final this thing, right? If other audit evidence is not available, you might go and ask for a representation. But again, when a lot of other audit evidence is available, if you go and ask for a representation, right? So the management will give a representation, but that might not be consistent with the other audit evidence available. In that case, whatever the representation you might have collected from the management might be of no use. So therefore, now this is an area, probably examiner might be interested in basically testing. Because of the habit of this, where so we always go for a representation without really looking into it and see whether this is an item where we require an audit, the management representation and all that. Second one is about this subsequent event, right? Now the subsequent event, right, is especially in today's context, right? Today's context, the subsequent events will have a major impact on some of the financial statements, right? Some of the financials, for example, subsequent financial period, subsequent events happen, right? Some might be adjustable, some might not be adjustable, right? And etc. etc. So therefore, how to deal with them in basically auditing the financial statements, right? And say accounting estimates, right? Estimate and a fair value estimate. Fair value, basically, I basically communicated you all earlier also. Along with that, say the use of management expert and auditor's expert. Now, I believe that you all have already gone through this, the standard. use of management expert and auditors expert, right? Now, for example, last year examination, there was a direct question from the external confirmation, right? The external confirmation direct, from the book, right? Kind of, right? So therefore, now it was asked similarly. Now the things like the use of management expert and auditors expert. Nowadays, now for example, certain things it goes on to say that if the auditor is of the view that auditor's expert is really required to get some assurance about get some comfort on some numbers shown in the financial statement. Now it goes on to say that now so there are certain numbers shown in the financial statement, but auditor yes, number is correct, right? So therefore, auditor might, the management might have hired a management own expert, right? And auditor's own expert. So then determining, okay, what are the circumstances where the auditor decide, right? Auditor's expert is required, right? Second one, okay, how to evaluate the objectivity, how to evaluate the work of the auditor's expert, how to evaluate the work of the management expert. Now these are the things regularly tested and regularly, I mean the stuff you all basically are competent and aware of. But again, what I am saying is in the current context, auditor's expert and the management expert, these areas are really important. Now earlier I said that the valuation, right? Valuation of fair value measurement of investment property, PPE, etc., right? Has a the major impact on the numbers, and is are topics highly debated and discussed in practice, right? So therefore, when those come into play, now these the areas are also heavily involved and really important. For example, you hire an expert, management expert, right? The management has hired an expert. Sorry, the management has hired an expert and got a valuation done on something, and that value is sitting in the balance sheet. Now, how should I see whether this number is? How should the auditor check whether that number is the okay or the number is acceptable to him, right? So therefore, remember that in that particular case, right? Now evaluating the management's expert work come into play. Or second scenario, auditor might be of the view that okay, the management's expert work is not acceptable. He wanted to go for his own expert. What are the circumstances where he will decide? He wanted to go for his own expert. And then if he go for his own expert, right? Then how does the auditor decide the objectivity, the sufficiency, etc., of the management, I mean the auditor's expert work, right? So likewise, the kind of the areas which I felt, so by going through the numbers appears to be important, right? Finally, the last one, the ethics question, right? Now, as I communicated to you all earlier, now the last two examinations, this number has been increasing, right? Now 10 to 15 to 10 to 12 to 14 to whatever, likewise, right? So therefore, the way this thing has given, I feel that even this year the examiner appears to will increase this one, because practically this area is an important area, and the last two examiner has been increasing it one. So therefore, give more attention. I know that most of the students don't take it seriously. You ethics, no, we know that, no, right? Code of ethics, small book, this and that, 10 marks, right? We know it, right? But the most of the time that is the perception of the students, right? But again, remember, now if the examiner keeps on increasing the weightage given, right? Examiner might want you all to study more, right? Might not test you all on the very basic stuff, right? Especially because now the last year, if you all take the last paper, the areas tested, is fairly, complex, right? So therefore, now the new code of ethics is being published by the institute, right? And the new corporate governance rules and regulations, they all are there. So therefore, go through it and see, right? Try to understand especially those the aspects, especially the evaluating threats. Right? This is the area where you all have been always tested: evaluating threats, threat, self-review, familiarity, advocacy, and intimidation. Right? So those were basically the main the threats, right? Evaluating these threats to the auditor, right? Review, familiarity, advocacy, independence, then applying safeguard. They are always asking, what is the threat, and then what safeguard you should apply. So therefore, these are of course practical questions, right? Practical question. Therefore, we'll have to have some practical experience. I mean, we have to have some understanding, right? So what are the threats and how to deal with them? So because all practical the stuff have been tested, and then test to auditors' independence. One other very important area tested regularly, test to auditors' independence, like the relationship that could impair the independence, right? Fees and other remunerations, right? Provision of non-assurance services, right? Especially provision of non-assurance services, right? And fees and other remunerations, and the relationship that would impair the independence. So those are some of the the areas I think that so will be really useful for you all. And then nowadays, so there are a lot of discussions going on about the audit committees, right? Listed companies having the audit committees, duties, why audit committees are there, and duties and responsibilities of the audit committees, right? Audit committees. Now most of the listed companies, they do have audit committees. Why audit committees are there? What are the duties and responsibilities of the audit committees, right? It's a bit of a concern, right? So because it's discussed heavily. For example, a lot of programs are also going on, right? We institute also had a program, right? So directors program where this aspect was discussed, right? Likewise, there are many forums where these audit committees and their duties and responsibilities, and so what action they are taking to ensure that good governance and good practices are being discussed. So therefore, consider about it. And then about the quality control, right? The quality control basically is element of quality control, like the leadership, right? Leadership of the firm, right? For example, senior part of the firm, getting involved, right? In the sense, giving the required direction and taking the leadership in ensuring the quality control, right? So basically, it's about the 6 elements of quality control are being discussed in this particular standard: leadership, and then ethical requirement, acceptance and continuance of the clients, human resources, engagement, performance, and monitoring. And then finally, so it discuss about the engagement, quality review, engagement, quality control, right? So these are basically the areas that I feel that so by going through the papers and etc., I felt that is really important, right? Now, so because within 2 to 3 hours can't discuss the entire syllabus. What I did was going through all that identify, because our studies will have to be very focused, right? So because here also what it says is the students appears to have not focused on, right, compiling the answers. Just the thing is, if your studies are not focused, everything, but not to the depth it is really required, right? So therefore what happens is you write something little, right, but that might not be sufficient, right, to get the required marks. So therefore now your studies will also have to be focused, really focused, right? You have to give more priority, more attention, more weightage on the area that has been regularly tested by the examiner. That is why, to give you all that help only, I did this investigation and analysis of the last so many years papers and the current trend, the current matter discussed and all that. For example, now even the current business, the trends, right? Current, the economic things happening in the economic environment, right, will also be quite useful for you all, especially in compiling the answers. So for example, things like now what is happening to the interest rates? The interest rates are regularly coming down, right? So now this will have some of the organization that will have the massive positive aspect, positive benefit for the most of the organization, because when interest rate comes down, there will be massive saving, your profit goes up. So therefore there will be, for example, when you evaluate the going concern kind of a thing, right, reduction in the interest rate will have a positive impact on the profitability, right? So there are certain instances where these things will have to be considered. For example, reducing interest rate, now reducing the inflation. For example, the boom in the stock market, right? Boom in the stock market. Now these are, for example, now they talk about now whatever it is, right? Say now recently I saw that last week I saw it in the newspapers that UK Parliament, they have suggested EU to ban kind of a thing, right? Ban export from Sri Lanka to European Union. For example, most of the garment factories now here in Sri Lanka, right? Most, not only garment, most of the the exporters of our country are exporting their products to European countries. If by any chance European countries ban the export of products from Sri Lanka to Europe, what will happen? Right? Going concern of those entities might be or will be or might be affected if they find it difficult to find any other the country where they can export their products. So for example, EU says no products from Sri Lanka due to whatever the reason. If that is the case, this thing might be affected. Right, I don't think that EU will take a decision like that. For example, recently, for a month before, like the EU, I think EU stopped importing fish from Sri Lanka, no? Right? So therefore, now, for example, if there was an entity here, right, whose business was processing, say, fish and exporting fish into the European Union, now what will happen? Now, for example, then minister, I heard that he said that now China or Russia is ready to buy fish from Sri Lanka. But if they are ready and if we can export our products to there, right, I mean, there's no issue. But if by any chance they are not willing to buy, right, the going concern of the particular entity will be affected. Right? Now, for example, you all know, for example, environmental concern, you all know what happened at Ratupaswala factory. Now, for example, whatever that factory and, and Hangwell, the factory, due to whatever it is, now say they had to close it down. Right? Okay, they are operations or whatever it is, there were some environmental concerns and etc. etc. So therefore, because of the things of that particular nature, they had to close down their factory. So therefore, going concern might be affected. What I'm saying is, the things happening in the business environment, right? So like those, environment and the interest rate, inflation rate, foreign exchange rate, right? And then the international market, what's happening, right? And the share market, what's happening, right? So those will have an impact on the business organization. Therefore, having, for example, now the previously examined asked about the pawning. World market gold prices came down, had a massive impact on some of the business organizations here in Sri Lanka. So therefore, those will have an impact on some of the business organization. One other thing, now for example, most of the business organizations nowadays are selling debentures to raise the long-term funds, right? Selling debentures to raise a long-term fund, the risk associated with or the benefit associated with them, right? So might be another concern or might be an area tested by the examiner. So therefore, we'll have to be current, right? That's why I'm asking you all. So for example, whenever possible, take the Financial Times and all whatever these English the business columns of the newspapers and read. That will give you all quite useful information, right? So therefore, finally, to conclude that that you all want to go and all that. So identify this particular structure. It's very easy to identify the structure if you will go to last 2-3 papers, right? First question is about audit planning, right? And several standards were covered, right? In addition to that, group audit was brought in, right? Especially in the group audit, I think that since it was tested heavily, foreign subsidiaries can be brought in, right? And the standard I earlier said that were heavily tested. So therefore, so you all can focus on them. Second one is evaluating the audit evidence and the identifying audit evidence in a given scenario, and some of the areas I basically explain you all. So therefore, give more attention or more priorities like representation and all that on that one. Okay. Like that. The third one is about evaluating the internal control. I gave you some idea as to what could go wrong, right? Likewise, and then come up with appropriate control, and if possible, take that the business law or the executive level book and see whether you all just read it and just to get an understanding as to what how generally the processes are worked and all that. The fourth one is about the auditor's opinion and said that okay, circumstances that require modification into the auditor's report and going concern connect into the auditor's audit opinion, corresponding figures of the opening balances, testing with audit opinion and all that. Finally, it's about ethics and the quality control. Quality control is again, read this particular standard, it's very important. Elements of the quality control, why it is really required. So can general question ask us, what are the benefit the practitioners, right? and the profession and other people might get from a quality control. For example, if the institute does a quality control, the auditors will ensure that they will do a proper audit. They will not sign their financial statement without doing any work, right? So that ensure that public confidence of the public on our profession and our institute will enhance if the quality control process is in place, because our auditors will ensure that they will do a proper audit, right? So therefore, the question, general question like that can be asked, right? So therefore, we'll have to see the elements and the benefit, etc., and the ethics, right? The importance of ethics, right? Independence, right? And how to deal with those in the event where the whatever is impaired will have to be basically studied, right? So those are basically the areas I felt that this thing, especially about this internal control, also be very mindful, internal control one, right? So the always you have to with that the we call it professional skepticism also, right? Where the question in mind, what could go wrong, right? And then come up with something. Okay, that's what basically I got to tell you all. It's not that I wanted to teach you all auditing as such, because within this hours we can't do that. I gave you all sort of a broader guidelines to work and focus your study, right? And prepare for the examination and get through the examination. So if that is the case, right, if you all don't have, once this is over, you all can come and ask questions if you all have, right? If not, all the best for your exam, right? And wish that you all get through your exam, right?